Now, more on Macy's. As Bob said, it lowered its guidance, with the company's CEO, Terry Lundgren, citing continued weakness in consumer spending. And investors showed no mercy, sending shares down 15% today. The weak results, coupled with previously poor earnings from other retailers like Gap, led to an overall retail wreck, bringing the whole sector down. In fact, the group had its worst day in the stock market since August of 2011, and it seemed no one was spared. Accessory maker Fossil was punished after reporting lower profits, down 29%. Dow Components, Home Depot, Nike, Walmart, all lower. But Macy's seemed to be the catalyst, and Courtney Reagan takes a look at the damage.
There was no magic for Macy's in the first quarter. Sales disappointed analyst estimates and the retailer's initial guidance. As a result, Macy's slashed its full-year forecast. Comparable sales, the most watched metric of a retailer's health, fell for the fifth straight quarter, this time down more than 5%, the worst performance since July 2009. Earnings, however, were better than expected, but not good enough to give investors hope for a near-term turnaround. Just as many analysts predicted, CEO Terry Lundgren confirmed Macy's sales meaningfully slowed beginning in mid-March, and that's on top of weakness experienced in the last several quarters. What's worse, the slowdown was primarily in goods Macy's considers its core categories.
Handbags have been a little bit soft, some areas of footwear, so they missed comp, and a lot of that is due to traffic. So Macy's is really needing to rethink the future of department stores, and we think Amazon's a factor too as well.
Lower spending by international visitors is a big factor too. It's the second year of double-digit declines for sales to tourists, which in recent years had been a strong component of Macy's best-performing big city stores. CEO Terry Lundgren sounds like he's all but given up on the consumer, saying his team is, quote, not counting on the consumer to spend more. So we're working harder to give customers more reasons to buy from us. Macy's also owns Bloomingdale's, and its former CEO, Michael Gould, says retail struggles amount to more than a sea change in the industry.
I really believe that we're in an ocean change right now. I think the internet is part of it. I think the way the millennials think is part of it. I think when you walk in a store and see a 65-year-old lady who's young, but a 65-year-old lady walking up and down the aisle with her phone checking prices, we're in more than a sea change.
Gould says consumers continue to spend more on experiences than material goods, which means Macy's isn't alone in its struggles. L Brands, Gap, and Fossil have all reported disappointing results recently, and there's likely more of a retail wreck in the earnings reports still to come. To adapt, Macy's has hired real estate professionals to unlock value. It has a joint venture with Alibaba in China. It's rolling out its own outlet-type concept, expanding jewelry and beauty offerings and more. But results from those initiatives aren't expected until later this year, and the big question remains, is it enough? For Nightly Business Report, I'm Courtney Reagan.